All right, cool. Test, test. Nice. All right, so we're gonna do our market update. We're gonna do everything that we typically do. But first, I just wanted to kind of maybe like involve you guys a little bit in some of the things that I like to study. Um, even if you are not maybe the same level of proficiency as me, I think it's still valuable to kind of maybe study together and kind of investigate price and different strategies and stuff like that. Obviously, I don't want anybody here to be changing up their strategy too much. I'm sure everyone here has their own version of what it is that they like to trade. Um, and me, even even after being profitable, I always kind of am looking to see, what's new information that could potentially be valuable to me. So what I wanted to do is I wanted to work on mapping out this right here. So most of us are already comfortable enough with the market maker model. What a lot of us are not comfortable with are is using TDT and kind of blending the two, which even for me is maybe kind of somewhat new. There was a point in time I spent a lot of time focusing on this, but I'm not gonna lie to you guys, it's really, really dense information. So, the way that I kind of work with that super dense information is I like to kind of blend the two, because for those of you who don't know, if you're familiar with ICT and you're not familiar with TDT, they kind of coincide with each other, right? So TDT being candle counting technique, where we count specific candles, and most of the time, right? Like let's say, I don't know, just for as a thought experiment, right? Let's say we got 7 or 13 candles all the way down here, and the 13th candle just so happens to take out these relative equal lows. Um, that's a lot of what I've witnessed in my study with TDT is that, um, counting the candles is a form of counting time, right? And obviously, price signatures are price. And so when you combine the two, you get a nice little mix of time and price. So what I'd like to do is a long time ago, let's see, maybe I can even show you guys the messages, or maybe a message, maybe not the messages, but a long time ago, back around here, I had made a post about essentially just kind of foreshadowing that I think that um, this is accumulation, this is manipulation, this is distribution. Um, and I went back to it later on, and when I went back to it, I started mapping it using TDT and trying to find um, how they coincide, let's say. Let me see. I'm just trying to. I don't want to show all the messages, but let me just find the picture. So, yeah, so pretty much I like to do the same thing, and hopefully it can give us some form of insight. So, here's the tweet that I had originally made, right? Just so you guys can see, we've been using these concepts for a really long time, right? So we're looking at this yearly accumulation. We're looking for a move lower, right? And this was all the way back in March of 2025, right? And then let's see, is there a way I can? Yeah, here we go. So I know there's a lot of writing. Don't pay so much attention to the writing, but um, what I essentially was looking for was 20 candles of consolidation. There is a rule inside of TDT, maybe not so much a rule, but a concept that says that consolidations, reversals, expansions, um, retracements, They all have a specific number of candles inside of them. You typically see roughly the same amount. Maybe not always, right? But on a more consistent basis than not, right? Uh, yeah, I saw that too, which I don't think I don't know. I would just say I don't think it's worth it. I think everything that he's already put out is good enough. And for the people that paid for the first mentorship, I mean, that stuff's out for free now, so doesn't really matter, right? So what I'd like to do is I'd like to kind of figure out the TDT countings for NQ, which we'll do it at the end. We'll see if we can squeeze it in there, and we'll get the market update out of the way first. Okay. So we have another just straight out the gates, right? Daily candle where it's just like honestly, it's ridiculous how strong price is right now. I think even on ICT stream, he was expecting a kind of a TJIF where we retrace back into the range, but we're really not getting it. This ceasefire being extended, um, I mean, apparently it's good enough news to produce this kind of price action. So once again, guys, like I said, when we're in all-time highs, with the exception of ICT, don't try to short the all-time highs. It's a lot more advantageous to just go with the trend, even if it doesn't make much sense, based on all the news and stuff like that. It's a lot better to just kind of stick on the daily and ask yourself, are we trending up or down? Which, like I always say, it doesn't take a technical scientist to be able to look at this price action and say that clearly we're trending up, right? Um, Even on Bitcoin, right? We look at this chart, we can see change in stated deliveries being respected, right? This order block, this fair value gap, we have a market structure break, IRL gets respected, IRL gets respected, right? Um, we come into the midpoint of this reversal candles wick, respected, and on and on. Now, if you are going to play the knife catching game, it's a fun game, painful game sometimes. If you're going to play that game, at the least you have to require a sweep of previous day high or previous weekly high. Okay? So that's something that you should write down that if you are going to try and short, at least have that. That we took out previous day high or we took out previous weekly high. Have some sort of key level in mind and don't just go in there willy-nilly. But yeah, we pretty much had this little market maker buy model play out. That right there is probably a good section of price action to study if you guys are trying to become a little bit more proficient with using the market maker model. But yeah, so jumping back up on the daily, we have a new daily order block. Now, the bullish price signatures are going to serve two purposes for me. Number one, if I want to go long, obviously I need one of those key levels to be hit, right? Especially on the daily. Number two is if I'm the guy that's in the seat right now that's thinking, although there is bullish price action, I'm expecting and anticipating a move lower soon. You're going to want to see these get disrespected, right? So we kind of talked about how we had this little change in state of delivery. Reason why I kind of wanted a little bit more confirmation was because of old idea that we had quite some time ago that if we didn't make the move lower down here towards these lows, then it's likely that we come up to the premium of this this entire leg, right? Which, if you guys are new here, premium and discount, it's just a fancy way of saying if we take a price leg, we cut it in half. The bottom, the bottom portion we consider to be discount. The upper portion we consider to be premium. I would like to go short in premium, not in discount. It's not to say that you can't go short in premium, right? You could have shorted off of this and made some good money. But it's higher probability when we can get it in a premium fair value gap, right? So we'll go ahead and we'll map that out. Premium fair value gap. Right, and for now, this is going to be the key level that we're working with on the weekly. I would expect that we get some sort of a reversal off of this level, but again, and this is really important, guys. We are in the business of making money, being profitable, not being right, which I know maybe sounds kind of like paradoxical, but it's not, I promise. We can be wrong about our overall expectation and still make money, right? So that's why I don't beat myself up if I'm wrong, right? I thought that maybe we would go for this low. We didn't, and that's okay, right? So we're looking at this premium fair value gap now. I'm going to use the 4 hour to monitor after we hit it, which I think we have today, just barely. I'm not gonna lie, I would like a maybe a deeper move into the level, but I would start monitoring the 4 hour, looking for reasons to take a short, right? Maybe there's an inversion here. Um, I wouldn't necessarily take that. I'm gonna require more, what do we call it? More confirmation, right? I at least want to see like a daily C2 where we close back inside this range, right? Something along those lines to where I can actually start building a proper strong thesis because look at all this right here. Who can tell me what we got right here? And it's not the buy side of the curve. Think about what's under these swing lows, right? We got a lot of stop losses, aka liquidity, right? Low resistance liquidity. Now, is really what I'm keeping my eye on. I'm kind of foreshadowing, right? Again, I could be wrong, but I'm seeing all of this as low resistance liquidity, and I'm thinking um, probably in May is when we're gonna start cleaning all this up. It could happen a little bit sooner, but that's what I'm anticipating personally. But for the time being, even if those are my overall expectations, the daily is kind of like it's like using the stethoscope on the chart, it's kind of seeing if we're healthy, if we're a little bit something's wrong, right? So for now, if the daily bullish PD arrays are being respected, then I cannot go short. I need to see that. Which again, like I told you guys, if we end up being right and this is just a big market maker sell model, right, and we end up rolling all the way over, we're gonna have a lot of time to get in. So we don't need to rush that, right? And for now, we can just kind of stick to longs until we get some good reaction off of this premium fair value gap, right? And if we, in the event that we actually close above this fair value gap, then the assumption will be that we're going for this kind of 97.7K. And that would be a nice little catch up for Bitcoin, right? We've had what? Maybe like a 50%, yep, just about 50% retrace and a 30% move back up. All right, still got a ways to go. Still a long ways to go before all-time highs. But yeah, that's what we're going to be working with on Bitcoin. So just be careful, guys. If you're shorting, the daily does not agree with you right now. The weekly does not agree with you. There is nothing um, on the immediate high time frames, especially now that this high has been taken out, um, that is saying it's a good idea to go short right now. Okay, so move to ETH real quick. Same thing. We'll go ahead and we'll map out that premium discount of this leg. Okay, now for those of you that are not very familiar with SMT, keep in mind only one of the assets, BTC or ETH, actually has to hit this premium for value gap. They don't both have to do it. They can, but they don't have to. So keep that in mind. Maybe BTC hits it and Ethereum falls short. That's going to be a good little piece of information that if you are going to start shorting, best to do it on Ethereum, um, where it's weaker. We got some relative equal highs up here, some relative equal lows down here. So let's see what happens over the next coming days. Um, yeah, I mean, I don't even think Sol would make it to the premium if we're right about these kind of short foreshadowings. I don't think we make it all the way up here. It's just really weak right now. But we'll keep it on the map just in case, and we'll keep an eye on it. Probably more likely that we sweep this high than actually reach that premium. So we'll go ahead and we'll map that out too. All right, we got relative equal lows down here. Always good to see. Um, let's talk about hype. We're still waiting, right, for that candle to close, which so far so good. We still got 4 days left, but so far so good. And on the lower time frames, this looks like a pretty nice market maker buy model that's being set up right now. And we just got the inversions. We're just short of a change in state of delivery here. If you're looking to trade candle two, probably hopping in either off of that inversion, which is already passed, or this change in state of delivery is probably going to be the move for hype. So keep an eye for that. It's a potentially really good market maker model setting up. Specifically, if we can close above this cluster, I would be pretty convinced that we're now on the buy side of the curve, right? So we'll leave that for hype. Yeah, so we're just waiting. We're pretty much just doing weekly IRL to ERL. But we have to be careful because we swept this high, right? So it could be a retracement or it could be a reversal, but judging by last time, right? We swept, we retraced, we made a new move up, swept, retrace, potentially making another move up. Um, Plus, I think hype it kind of stands out a little bit, being that I don't even know the exact news, but I just know that you can trade ES and NQ 24 hours a day on hype now. So if I'm not mistaken, that's one of the reasons why it's just been absolutely popping off. Doesn't give a shit about what the rest of the market's doing. It's doing its own thing. Um, if you guys remember the video, which I'm pretty sure I showed the video here, but if you guys remember the video of the pendulum wave, right, and we talked about kind of visualizing what harmony and chaos would look like on a chart, this is definitely looking like harmony, right? Very, very clean respect of these weekly levels. So um, we keep following that until we get something otherwise. What were we talking about earlier? Was it Euro USD? I could have swore it was Euro USD. It was. I think I just deleted yeah, I deleted the chart. So if you're trading Euro USD, okay, there it is. That's why. Let's see. Do we have PSP? No, we don't. SMT? No. Let's go back to dollar real quick. Yeah, so if we're bearish on dollar, euro should be Sorry, mic disconnected. But we actually should be expecting that the price maybe continue to go a little higher. So for now, um, price is giving a nice little reaction off of this bearish fair value gap, but we also have this bullish fair value gap down here, right? We had a market structure break, right? We have a, is that an inversion? Nope, just shy of an inversion. But definitely from ERL to IRL, we'll probably be looking for maybe a bullish move out of this level. Let's see if maybe there's a little market maker model on here. Not the cleanest. Let's bring up the schematic again. Hopefully everybody who asked for the schematic yesterday was able to get it and look it up. Where is it? Where is it? Here it is. So it's not the prettiest, but I would be expecting something like this. Something like that. Turn that transparency down. We'll lock it in too. That's what I'm going to be expecting for you, which, like I tell you guys, you can trade the sell side of the curve if you like. Um, it's everybody's own personal kind of I don't know, trader personality of what it is that you like to trade best. Me personally, I like trading this a lot more, but as you can see, right, market structure break here, bearish fair value gap respected, change in stated delivery here, retest right there, price is moving lower. It's still not bad price action to trade it. In fact, this one is actually pretty clean. But yeah, it's just personal preference at that point. But that's why I'd be looking for euro. For dollar, I mean, it could go back up into this maybe this volume imbalance and fair value gap again. I don't necessarily want to see that, but it would make some sense in that it's in the premium, right? So let's keep that in mind as well. So that's euro. GBP is pretty much the same thing as euro. Um, did someone want to look at USD JPY or no? Yeah, we'll do some. We'll take a look at near. Let's see. Here we go. We got the crypto watch list out now. All right, cool. So we'll delete these. Let's take a look at the monthly. Take a little quick glance at the monthly. Take a little glance at the weekly. Bless the saying long gold. Someone screenshot that. Hold them accountable. All right, so let's see what we got here. Okay, so we got some. It's a little bit confusing, but we got this move off of this daily fair value gap. We took out this ERL, swept it, came, well, yeah, came back inside, tapped the fair value gap. Now we're moving up. So actually, this is the ERL we're moving to right now. Okay, so we actually don't need this anymore. All right, so high time frame chart, aka the weekly slash daily, is looking bullish. Okay. Um, we're essentially in an IRL to ERL move right now. And if we moved back inside of this level, $1.32, $1.28, that's where I would be looking to go long. If you're already long, probably a good idea to just hold out from here. Um, I'd be looking for an order block to get formed right here. Let's kind of change the colors a little bit. Yeah, tell me, bro. What's the question? So we'd be waiting for a potential change in stated delivery here, question mark. Let's see if we get that. If we do, then I think longs up into here uh should be pretty free. But yeah, price looks bullish. Price looks like it's in a market maker model, just not the maybe the cleanest version we've seen. But yeah, we can see the sell side of the curve, buy side of the curve. As a new trader, do you think trading multiple assets is best or to stick to one asset and master it? What is your guidance as an experienced trader? That's a really good question. And I'm definitely gonna say that focusing on one asset class is probably the best thing for you. The less things that you give yourself to focus on in the beginning, the better. Me personally, even though I do market updates across multiple asset classes, you will typically only find me trading one of those asset classes, and even inside of said asset class, you will only see me trading not all the assets that it has to offer, right? So if I'm trading crypto, it's not going to be anything different than either I'm in a trade on Bitcoin, ETH, or Sol. I'm not really looking at anything else personally, unless it's something like just kind of funny that I like that last coin that we looked at, Rave. I was looking for shorts on that one, which normally I wouldn't typically trade, but just because it's funny, and I think that this coin's going straight to fucking zero, uh, you know, I take it. So yeah, it's a good question. In my opinion, either stick to indices, crypto, commodities, and when you're inside of that asset class, don't even bother looking at anything up more than two or three. And the only reason that I say two or three is because, you know, if you're familiar with SMT, you kind of have to look at all three of the asset classes, right? To figure out where the SMT is at. But if you're not really looking for SMT, then I would even say that you should only be focused on one. Only trade one asset because here's the thing. If I pull up every single day and I'm just trading ES, I'm going to start to become very familiar with the way that ES moves, and I'm going to be able to extrapolate information that I wouldn't otherwise be able to consistently if I'm looking across so many different asset classes. So just one like very basic insight from seeing the chart right now is, oh, hey, if I want to catch a really good move on ES, I should probably trade it during New York AM session because New York AM session, as I can see for the past few days, has offered very opportunistic moves. London and Asia typically look like consolidation and just not that exciting comparatively to what New York AM is offering, right? So it's little insights like that that you will start to garner over time when you become very familiar with an asset. For me, the first asset I ever traded was Euro USD, and I stuck with it for a really good amount of time. Then it was Bitcoin, then it was NQ. Um, and you start to get really familiar with the way that they move. Even now, right? Like if I step away from the charts for let's say like 2 weeks, when I come back, there's like 3 days where like I'm not even trading. I'm just trying to get back in sync with the market and get a feel for it, right? So you should be in, kind of comfortable with anticipating price on an asset that you're like very comfortable with. If you throw me on Rave, I don't know what the fuck is gonna happen in New York or Asia, right? Now I kind of want to see just 'cause, but like you know, m- maybe if I came from trading NQ and I'm like, oh, New York AM is the one that always offers the move. Well, maybe not in this case, right? It looks honestly like Asia is the New York in this case. Minus that, holy crap. That was all one New York AM session. That's crazy, I'm not gonna lie. But Asia is giving a lot of good moves on this chart. I don't know. Maybe it's a Chinese coin. I don't know. But yeah, so it's a really good question. Yeah, we'll do fart coin. Um, the New York session has much more liquidity in the market, so we can actually catch big moves in gold and Nasdaq. Yeah, and even then, right? I'm not gonna scroll so far back where I'm gonna find it, but um, there are times where London is the winner and it's not New York, right? And I will only know that if I'm pulling up to the charts every single day, right? Well, not every single day, but you know, more chart time, the better you're gonna be. If you guys train any sort of like, I don't know, if you go to the gym, you can't just go to the gym once a week and be like, yeah, I mean, I'm getting better, right? You're not probably not getting better. You have to at least put in a little bit more time than that. Yeah, let's take a look at Farcoin. Let's see. Um, let's try and figure out what my past self was trying to tell us here. Um, is this done in the 4 hour? Or... That isn't a ridiculous wick, I'm not gonna lie. Where did I draw this fair value gap? Okay, what? I mean, I can't even tell to be honest. I assume I was trying to get some like daily premium and discount, but yeah. We'll start with a fresh chart, but everyone screenshot the fact that we had an X marks the spot here and it got hit. Nah, just kidding. Just patting myself on the back for no reason. All right, so I mean, this is honestly is a ugly, ugly chart, and the reason that I say that it's ugly is like just the wicks. Like the wicks are so like that's gross. That's nasty work right there. Um, but we do technically. I mean, this is bullish price action. Maybe the 4 hours. No, 4 hours just as nasty. Yeah, I don't know. I had to spend some time looking at this one. Um, it's just such an ugly chart. Okay, if I were to take a position on this god awful chart, uh, I would have this weekly order block mapped out, right? Because we took a low, right? We rejected it, um, created a higher low, and then created a change in state of delivery. So I would kind of be thinking, be looking for a market maker model. I mean, this shit is so ass. Like this chart is so bad. But I would be kind of envisioning something like this, right? Which I don't know, maybe you guys are getting tired of seeing the market maker model chart, but this is literally like this is how I view the market, right? Because we all know price is never just gonna go like this. It's always gonna go up, and then it's gonna go down. It's gonna retrace, and then it's gonna come back up again. This is the way the markets move, not like this, right? So that's how I'm always seeing the chart. And I'm just putting it here visually for you guys and for the fact that when we come back to it, we'll see if I was right or wrong, which I'm not always right, but um, I like to think I have a pretty good track record. So I would like to see a move down into this weekly order block for us to kind of start anticipating this, what do you call it? This smart money reversal down here. So let's see. We got these relative equal highs up here. It's just man, like the wickiness of of this chart is honestly is crazy. So yeah, we'll see what happens. Let's see what happens with Fartcoin. I didn't know we had still had Fartcoin connoisseurs in here, but I respect that. Yeah, yeah. I mean, this chart would fuck me up too. I'm not gonna lie. 'Cause there's just like there's not a lot of respect of anything, to be honest. Um, this is really choppy. Yeah, it's gotta be. I don't know. Elon was fucking chilling Fartcoin and exited on everybody or something. What else we got? We got gold. Still waiting. We're still waiting for gold. Gold's doing its thing. Um, like we said, right? It's just kind of viewing this as consolidation, and there's nothing wrong with consolidation. Especially on the buy side of the curve, we expect that, okay, we get one of two scenarios that happens in consolidation. Either we sweep the high, then we go for the low, then we start to get bullish, start looking for entries, or we sweep the lows and then we start to get bullish. So let's see what happens there. Because so far we're continuing to retrace lower, um, and I would expect something like this, right? Something like that. Appreciate you, bro. Appreciate you. Pax Pax G, isn't that like gold but crypto, pretty much? Yeah, it is. I'm not so sure that. I guess the charts are a little bit different. Mm. If I were you and I were trading PAX G, I would do my analysis on GC because it's essentially the same thing except PAX G is based off of gold and not the other way around. Um, I mean, we can still do analysis on it, but yeah, the analysis is going to be a little tad bit different. So we took out this low, we closed back inside of this candle, we printed a reversal candle, and then we had 3 weeks of pretty much straight up. Let's drop down to the daily, and we're going to kind of see that exact same thing, right? Where we have this consolidation, right? And when we get a consolidation, um, we're looking for this, or we're looking for this, right? This would be our double purge scenario, and the other one would just be a sweep of the lows. Now, this can happen too, where we just go straight up from a consolidation, but those I don't like to trade as much. I like trading when we get maybe sweep some of these lows, right? We got a lot of relative equal lows over here. We're putting in another one. In a sideways market, it gives false breakout. Do you often take the trades in that situation or wait until there's a proper break of structure? So the way that it's a really good question. The way that I deal with it is I'm not going to trade the breakout. What I will trade though is if we sweep, then we start forming some confirmation down here like inversion fair value gaps, change in state of delivery, and then I'll hop on board for the trade. But it's very rare that if price just closes above all this, I'm not gonna hop in here. You know, the most I would do is I would probably find like a fair value gap. If we got a strong market structure break, I'd be waiting for a retracement into expansion as opposed to trying to catch breakouts. You'll never have to fall victim to false breakouts if you're not trading breakouts, right? Yeah, yeah. Let's check it out. Let's see USDJPY. It's my old lover, old lover. Let's see. Got monthly IRL to ERL. Let's map out its previous all-time high. That's all-time high, right? Okay. Let's drop down. See what we got in the weekly. So definitely my eyes are snapping onto this right here. Not only because it's a little consolidation, but we got relative equal highs. Remember, guys, relative equal highs, they don't fuck around. They don't play. Relative equal highs, look at how price books it to that, right? Honestly, it's very nice. We also have a lot of some relative equal lows here. And clearly, right, it's kind of the same scenario. We're in a consolidation. So ideally, I like this. That's my ideal scenario. If we close above all of this consolidation with a strong candle, I'm gonna look for any sort of fair value gap or order block I can trade up into here. Usually when we're pretty close to our target liquidity, it's damn Mike, bro. Usually when we're close to our target liquidity, those are really, really good moves, right? Which would be pretty much what we call second stage redistribution. This move here to there, right? Um, Overall, it's bullish, right? Just that's a lot of consolidation. So it's looking like it's prepping for a pretty nice move. I would just like to see this cleaned up. I don't like to see relative equal lows when I'm going long personally. Takes away from like it being an A plus setup, which again, we can still trade it, but you know, that's not high probability. Let's see oil. I saw oil had a little good move up. All right, let's definitely clean this chart up. Mm, yeah, I mean this chart turned real ugly real fast, but I mean clearly we're on the sell side right now, right? We got these relative equal lows now. My guess, or at least what I would want to see, is either we market structure break this and we can start kind of coming to the idea that we're moving higher because once again we're presented with this conundrum in where we have relative equal highs and relative equal lows, so we kind of have to be a little bit fluid. And so when I'm being fluid, I'm saying, okay, either we get a market structure break here that will convince me that we're going to continue to move higher, or um, or we're going to use this gap right here to send us lower. One or the other. Which I know this gap looks confusing, but just remember open, low, high, close, right? And then open, high, low, close. So, well, actually, it would be right here. Yeah, there you go. So yeah, oil's a little bit. I mean, it's the one that's most affected by all the news that comes out, right? They say the strait's open, they say the strait's close. Um, it's pretty manipulated right now, so just be careful. See, did anything happen on AVAX? Our short got ran, potential short. What are we waiting for here? Ah, yeah, actually. Well, that's what we get for not listening to Bitcoin. Um, but yeah, it looks like most things right now are just going to be following Bitcoin and until maybe we get a strong move into here or some confirmation on the daily. Like if we sweep this, I'll be very interested. We got 3 hours left though, so let's see. We'll meet back tomorrow and we'll see how the daily closed and we'll go from there. But yeah, guys, anytime there's like news that is so significant about like, oh hey, today is the outcome of the Iran deal is gonna come out, don't even bother trading it. Like if ICT is not trading it, then you guys should definitely not be trading it. Um, but yeah, anything else, guys? Any questions? Any last minute charts? Or are we good? All right, I think we're all good. We'll do the TDT stuff tomorrow. I'll prepare the market update beforehand so I make sure that we have enough time. But if we get into it right now, well, we're gonna be here for a little minute extra. So let's get it done tomorrow. We'll do it together. We'll get a little study session in, and yeah, you guys will have me there to help out. Cool, bro. I'm glad. It's good to see you. Good to see new faces always. All right, fellas. You guys take care. Safe trading. Take care of those fundeds. Take care of that capital. And we'll see you tomorrow. Peace out, fellas. Have a great day.